We all know everyone loves talking about how great Singapore bank stocks are, rising dividends, record profits, and unbelievable share price performance over the past few years. What I don't see people talking about, though, is the potential downside risks of Singapore banks in the future, because every company will have some risks. So here's what you should know about the potential risks of Singapore bank stocks and why you should be aware of them before you go out and buy their stocks. First off is the chance of a global recession. We all know banks are cyclical stocks, so they move up and down with the global economy. Over the past few years, the global economy has done very well, even though interest rates have risen. So actually, DBS, UOB, and OCBC have benefited from a strong global economy and also rising interest rates. However, if this picture changes and the global economy goes into a deep recession, this could threaten both profits and dividends of Singapore banks. Just use DBS, Singapore's biggest bank, as an example and how its dividend performed in the last two crises of the past 20 years. In 2009, when the global economy was still emerging from the wreckage of the global financial crisis, DBS actually had to cut its dividend by 18%. What about the COVID-19 epidemic of 2020? Well, that was actually even worse. In that year, DBS cut its dividend by 30%. The second big risk to Singapore banks is something we don't often talk about right now, but it's the remote possibility of an invasion of Taiwan by China. In that scenario, financial sanctions could be placed on both China as well as Chinese citizens. How's that going to impact Singapore banks? Well, given China's size and the influence it has on Asia's economy, the immediate consequences would be obvious. But beyond that, Singapore's banks have also been courting a lot more Chinese citizens and their wealth over the years. So these banks' private wealth businesses could severely be hit. So there you go. Amid all the optimism around Singapore bank stocks, its rising dividends, and its record profits, we should also consider the potential downsides of owning Singapore bank stocks longer term. The first scenario, a global recession, is the more likely one. The second scenario, an invasion of Taiwan by China, is remote, but it's definitely something we should consider longer term. For more personal finance and investing tips, give me a follow here or subscribe to my free weekly newsletter at timtalksmoney.com.